This week is a pretty big week for my portfolio. Close to 50% of my holdings will be reporting their latest earnings report in the coming days, and I assume most of you are in the same boat here, with big tech companies like Microsoft, like Alphabet, Intel, Tesla, Meta, Visa, all reporting earnings in the coming days. I probably assume that most of you watching here are excitingly waiting for those numbers. If you want to look at the other companies that are reporting earnings this week, these are basically the biggest names out there. We got GM, UPS, PepsiCo, Visa, Tesla, Texas Instruments, Meta, IBM, Boeing, AT&T, Ford, Intel, Alphabet, Microsoft, Snap, Roku. Thank God Snap is now reporting after Meta and at the same day as Alphabet, so their effect on the stock market will not be that big. But overall, quite a lot of tech companies, big companies are reporting already this week. Of course, next week, you still have the likes of Amazon, Apple, PayPal, etc., etc. So let me know down in the comment section below which of your companies in your portfolio are reporting this week. Maybe we'll cover them on the channel or in a live stream. If you want to support this channel, maybe hit the thumbs up, subscribe if you have not. We're very close to reaching 40,000 subscribers, so thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So company number one I want to touch on and review is one of the best performers in my portfolio more recently, and that's Meta. I bought hand over fist when everybody was selling this company and saying nobody's using Facebook anymore, etc., etc. Stock was under $100. You can find those videos on the channel. But right now, Meta Platforms has a market cap of $1.22 trillion, still only a forward PE of 24 times, despite being up 36% year to date and up 123% since last year. Now, if you look at what the expectations are for this quarter with regards to sales, sits at $36.2 billion, up 26.4% year over year. Of course, down a little bit quarter over quarter. With regards to gross profit, expectations are for it to come at $28.88 billion, growing 28.15% year over year, but down close to 11% quarter over quarter, with gross margins at close to 80%. If we look at net income adjusted here, should increase 100% year over year to $11.42 billion. EPS adjusted $4.36, or on a GAAP basis $4.33. Both of them are going to expected to increase around 96 to 98% year over year. If you look at cash from operations and free cash flow, cash from operations should increase around 46% year over year to $20.43 billion, and free cash flow to reach $11.38 billion. That would be up 64% year over year. Now, Meta right now, compared to its 5-year mean, is a bit more expensive, but not by much. And I do expect that this business continues to accelerate. I mean, if you look at price earnings to growth, it's pretty easy to understand what the market expects this company to do in the coming quarters, to grow quite a lot, top and bottom line. The company is also paying a little dividend, 0.42%. And in the past 5 years, shares outstanding have come down by 10.72%. If we currently look at the average analyst price target, sits at $540, representing close to 13% upside from the price we're at today. And if you look at the graph right now for Meta, of course, I'm filming this before the market opens. Last week, we ended just at the 50-day moving average. It does seem like we're getting a small rebound right now in pre-market, so that's going to be quite interesting to see if we can hold those levels going into the earnings report. I fully expect the earnings report to be quite bullish, to be quite positive, and of course all the attention will be on the outlook, especially when it comes to the expenses, because previously they told us that they expect full year 2024 total expenses to be in the range of $94 to $99 billion, which was unchanged from the prior outlook. They anticipate full year 2024 capex that will be in the range of $30 to $37 billion. That's a $2 billion increase of the high end of their prior range. Of course, they're investing heavily in AI and non-AI hardware, in data centers, etc., etc. And definitely, let's wait and see how much money they're losing with regards to Reality Labs. They say here, while we are not providing guidance for years beyond 2024, we expect our ambitious long-term AI research and product development effort will require growing infrastructure investments beyond this year. And this move has made Meta one of the largest AI players on the planet. Moving to company number 2 I want to discuss here, and that's Google Alphabet. Right now, just under $2 trillion in market cap, still has a forward PE that in my opinion is quite cheap, 22.8 times. Year to date, it's up 10.31%. Return since last year, close to 48%. Of course, with regards to Alphabet, it's going to be very interesting to see how the business is doing because, well, remember, they started the year in not the right way. Problems with Gemini, some fears of, they're losing their dominance with regards to search because of all those AI agent chatbots, ChatGPTs, Perplexity, you name it. It's going to be interesting to see what the results actually show us. Plus, are we going to see some reacceleration in growth with regards to Google Cloud? Now, I know some of you will ask, why aren't you talking about Tesla? Because I already made 2 videos about Tesla in the last 2 days. So I'm not going to repeat the same thing. Those videos will be in the top right corner. Of course, I'm watching Tesla very, very closely. I'm going to do a live stream as well. So stay tuned for that. Now, with regards to Alphabet, these are the current expectations, let's say. So sales to increase 12.76% year over year to reach $78.69 billion. Gross profit to grow 14.3% year over year to reach $44.77 billion. If we scroll down and look at net income adjusted, an increase of 26.68% year over year. With regards to EPS adjusted and GAAP, same number, basically $1.50 and $1.51, both increasing around 29% year over year, but down quarter over quarter, 7 to 8% or so. With regards to cash from operations and free cash from operations should increase 28.7% year over year and close to 60% quarter over quarter. That's because of some one-time things that happened in Q4. Free cash flow to reach close to $19 billion. So that's an increase of 9.82% year over year and 55.7% quarter over quarter. And Alphabet, just like with Meta, are buying back quite a lot of their own shares in the last 5 years. Around 10% of the shares outstanding have been taken off the public market. If we currently look at some valuation metrics compared to its 5-year mean, it is now getting quite close to the 5-year mean, but in my opinion, for a company that is of the size of Alphabet, as dominant as they are and growing in a profitable, very profitable way, in my opinion, it is still quite cheap. Price earnings to growth sits at 1.35, forward PE 22.8 times, price to sales 5.6 times, EV to EBITDA at 13.1 times, which is bang on the 5-year mean. Then price to free cash flow 27.7 times. I mean, this is not a small startup that you're buying. This is one of the most powerful companies on the planet. If we currently look at the average analyst price target, it sits at $166, representing close to 8% upside from the price we're at today. But of course, like I said, a lot of attention will be on Google advertising, maybe YouTube as well. Google Cloud, is that continue to grow quite fast? Compare it to Microsoft Azure as well. And then how profitable is this segment actually becoming? Because remember, a year ago, it was still a losing part of their business, now turning into a profitable one. But as we've seen with Azure and AWS, it can become extremely profitable over time. Let's see if they can replicate that as well. Then with regards to the stock, last week we did touch on the 20-day moving average, but we finished above it. Right now, pre-market, the stock is basically flat. The 200-day moving average sits at $136, the 51 at $147.3. The market might also be anticipating more cost cuts with regards to Google or Alphabet. Moving into company number 3, and that's going to be Intel. I have high hopes for Intel. Their turnaround, I know it's going to take quite a while. More recently, the stock did get hit quite hard. Actually, year to date, the stock is down 31%. Over the last year or so, total returns are only 11.3%. It has a forward PE of 25.3 times, which of course, if you look at the actual growth of the company or the expectations, not that much. So some might say that forward PE here is quite expensive, which yes, I might agree, but it all depends on if or if not the company does execute on their own roadmap. Now, more recently, of course, we've talked about the money-losing business that is the Intel Foundry right now. They have big goals to reach in 2030. Execution here is key. Last week, huge red day for all semiconductors when SMCI announced their earnings date for the quarter, but not the preliminary results, which they usually do, which are usually good ones, so the whole market tanked. And then, of course, you've got tensions between the US, China, Taiwan, some restrictions on Intel and AMD will definitely have a negative effect on those stocks. Question is, how big of a negative effect will it actually be? Now, looking at what the market is expecting, we know that outlook for Intel was extremely weak, right? If you look at what they themselves told us last quarter, revenue between $12.2 to $13.2 billion, meaning only up 8% year over year. Gross margin 44.5%, up 6.1 percentage points year over year. Fine, but overall the market was expecting quite more. EPS 13 cents, huge increase, that because last year was just a complete disaster. We've talked about the positive comments when it comes to PC shipments, a refresh cycle. Now that there are more and more AI PCs out there, we know that in the second half of the year, we're going to have a huge tailwind. That's the Windows 12 refresh. Yes, I do expect some of these segments for Intel to be actually better than what they guided for. I do expect outlook to be better as well, but a lot of people will be looking at the data center side because AMD and especially NVIDIA have been dominating that side of the market. Intel, not so much. Maybe we're going to get a bit more color, some comments on the foundry business, new customer acquisitions, investments, stuff like that. Every positive comment is very, very welcome right now. Now, again, looking at the expectations, gross profit adjusted to increase 26% year over year. Again, those huge differences for the year over year when it comes to the profitability side of things. That's because, last year, as you can clearly see here, was quite a disaster. And because Intel is still investing quite a lot and those investments will only pay in the next coming years, you're seeing these numbers right here, cash from operations, but especially free cash flow being negative and expected to be negative for quite a while. Now, there was some huge news for Intel not so long ago. So Intel shared with us the biggest unboxing video ever as ASML's $380 million high-NA lithography machine is installed in Oregon fab, which, by the way, this means that Intel is the first one to have such a huge machine. Not even TSMC or Samsung has that right now, which could play a big advantage for Intel for them to reach their actual milestones by 2030. The company plans to test the usage of high-NA lithography with its Intel 18A process technology, albeit not for high-volume production, and eventually adopt it for the high-volume manufacturing with its Intel 14A fabrication process. Like I said, Intel is investing quite a lot right now in its business, especially in the foundry side of the business. All those investments, as we've seen with TSMC, right? TSMC, it's true that a large part is 3, 5, 7 nanometers right now, but they're still making quite a lot of money from the older technologies. It's the same thing that's going to happen with Intel. You're not just spending a lot of money right now, and then those technologies will not bring any profits, any more revenues, anymore in the coming years. No, in the coming years, you're still going to produce those, and those will still generate revenue, profits for the company, and pay back all those investments, and then some. But I'll repeat, with Intel, it's a case of execution is key. Now, with regards to the stock, since the announcement of Foundry losing quite a lot of money, the stock has gone down and gone down quite hard under the 200-day moving average. RSI is pretty low, but not oversold. We are at levels around $34, $35 or so, which we've seen those levels back in the summer of 2023 or so. We were around those prices for quite a while. Maybe it can provide a sort of a bottom. Of course, with earnings coming up, hopefully it's going to be a good one. Otherwise, look down below. So that will be it for this video. Of course, we're going to cover a lot of companies on this channel in the coming days. So stay tuned for that. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.